Good day, friends. Currently, we are learning how to do prompting for cash flow statement analysis. In the last two videos, I was talking about how I approach cash flow analysis and the very unique prompting to my approach. So that may not be the case for everyone else. So if you're not content or if you not like to go with that approach, a very generic approach which analyzes all the three sections of the cash flow statement can be used. So this is the prompting for that. Analyze the cash flow statement for the reason here and provide the following headings. For CFO, what it has to do. In cash flow from operating activities, the statement starts from PBT, and after all the adjustments for non-cash expenses and working capital, you finally get the cash flow from operating activities. That is exactly what we are asking, going to ask the model to summarize and give, and finally conclude the inference or interpretation along with any red flags. The next part would be for investing activities. Where all has the company invested? Or whether it is only investments or mutual funds, or it has bought any assets, interest income, has it got any interest from term deposits, and so on. Again, here also I ask for inference and red flags. And last is the cash flow from financing activities. It needs to highlight how the money has been raised or where the money has been spent, and finally summarize with whether it is rewarding shareholders or raising capital and red flags. And a last section, which is a overall cash position, like what is the increase or decrease in cash, opening questioning balance, which I will show you right away in the screen. Any red flags. So the last part, what I was asking the model to do is there is something called as cash on hand. There is opening balance means the previous 93 crores or whatever that actually went here in the next year statement. So this kind of comparison it is going to make and finally give a summary. So let me run this prompt, conclude the summary table with key numbers and comments. Okay, copy. I am using the cash flow statement analysis, cash flow statement of NMDC. Let me make it slightly smaller. So first it is tabulating the CFO, and there's a difference between PBT and the final net cash flow from operating activities. So why that difference? So all the adjustments details are coming down here. What is the changes in working capital? There's a decrease in trade receivables. How much inventory does change? Loans to employees. So all that is broken down here in the analysis and inferences. Let us focus more on the inference part. The company CFO is almost matching the PBT even after paying high taxes. Positive factors: good, working capital management, strong collection, and increase in current liabilities. Red flags: non-significant. Cool. Interest income is high, indicating idle cash, but doesn't harm operational health. So these are the kind of insights which we normally fail or miss to see. Like it's saying that their interest income is very high, which is indicates idle cash. It's right. NMDC has a huge amount of idle cash on its books. Conclusion reflects healthy operational performance. So let us see what is there for cash flow from investing activities. It has spent how much it has spent for capex, and this is the amount of interest income it has received, investment in term deposits, and investment in mutual funds. So the complete breakdown is here, and inferences. So major outflow. So okay, in terms of capex or investing activities, what it has done is more than the capex. Capex itself is 1847 crores, whereas the term deposit is almost three times, that is 5200 crores. So major outflow is term deposit, indicating the company is parking surplus cash conservatively. So this is the insight. Again, this is what I'm telling. The model can generate such insights which we normally fail to see in our regular analysis. Capex of 185 crores shows moderate investment, and there's a huge amount which is received as interest, which reflects cash rich reserves. Red flags: none immediate visible, though parking large fund and deposits suggest cautious stance on aggressive growth. Then let us go to cash flow from investing activities. There are some borrowing. Huge dividends paid, very high. It says dividend is very high, and it has paid some interest for whatever loan or lease it has taken. And the net cash flow from financing activities is outgo, net outgo minus. It is a negative. It's in brackets negative. So inferences, company has paid hefty dividends, focus on strong shareholder returns. Then company is not deleveraging, but seems to be optimizing its capital mix. Red flags, okay. Paying large dividends while borrowing may be questionable if repeated without significant operational growth or investment. Then the company strategy appears to prioritize shareholder returns. Good. So the overall portion. Then I told you, right, there's something called a starting cash, opening balance, net increase, closing balance, all that will come here. There is also no red flag. And finally, I had requested a table. You can see, conclude with a summary table with key numbers and comments. So what are the PBT, CFO, CapEx, all those key numbers are comes as a table with the numbers and what that indicate. So healthy base profit, strong operational performance, CapEx, moderate asset investment, interest income, indicates surplus funds, term deposits includes conservative cash deployment, dividends paid, aggressive shareholder return, net cash from financing reflects large dividend outflow and so on. So typically, if we were to do this kind of analysis and reach this level of what to say summarization, it's going to take time and also experience. Whereas the model does it quickly for you, and you could make inferences in no time. So in our next video, we'll catch up with the final video on the cash flow statement. It is about the different cash flow ratios. Till then, bye.